Welcome back to Explain the Charts, everyone. Today, July 31st, 2025, we're dissecting the AUDUSD pair, a currency cross that's been experiencing significant volatility and uncertainty. Let's first look at the broader economic landscape influencing this pair. Recent news indicates a challenging period for the Australian economy. Australian inflation has cooled down, and the jobless rate has hit a 3.5-year high, leading to increased speculation about potential easing measures from the Reserve Bank of Australia. Such domestic weakness typically puts downward pressure on the Australian dollar. Conversely, the US dollar has shown mixed movements, at times strengthening post-Federal Reserve actions, while also experiencing slight pullbacks. There's some conflicting sentiment in recent reports, with some indicating AUDUSD struggles around the 0.6500 level, while another from economies.com previously noted a breach of the critical 0.6590 resistance. This divergence highlights the dynamic nature of this pair, but the latest data from our charts strongly aligns with the bearish sentiment surrounding the AUD. Now, let's turn our attention to the daily chart to understand the broader trends and reversals. Looking at the period from early 2024 through mid-2025, we can observe distinct phases. After a volatile first half of 2024, AUDUSD experienced a significant uptrend from late June into September 2024, peaking near the 0.6937 level. This 0.69 mark clearly acted as a strong long-term resistance. However, this upward momentum was sharply reversed in early October 2024, marked by a massive single-day drop. This initiated a clear downtrend that persisted through November and December 2024, with the pair falling to lows around 0.62 in mid-December. The subsequent consolidation in January and February 2025 failed to establish a strong recovery. Zooming in on the daily chart, specifically from late March to late April 2025, we witnessed another critical event. Despite some attempted recoveries, the price suffered a dramatic fall on April 4, 2025, dropping by a staggering 4.5% to touch lows around 0.6041. This created a new significant support level in the 0.60 to 0.61 range, reinforcing the long-term bearish bias. This severe drop can be correlated with a period of heightened market uncertainty or a strong surge in USD demand at that time. From this low, we saw a notable recovery, with the pair climbing back towards the 0.64 to 0.65 range through April and May, attempting to reclaim lost ground. This rebound shows the inherent buying interest at major support levels. Now, shifting to the 1-hour chart, let's analyze the more recent price action, specifically from July 10th to July 15th, 2025. We can see that the initial part of this period, around July 10th, saw a gradual increase from 0.654 to nearly 0.659. However, this upward momentum quickly faded. From July 11th onwards, the hourly chart shows a choppy but distinctly downward bias. On July 14th and 15th, the pair saw sustained selling pressure, pushing it down from above 0.657 to break below the 0.654 support level. By the close of this data range on July 15th, the price was hovering around 0.65189. This indicates a short-term bearish reversal after failing to sustain higher levels. For an even closer look at current volatility, let's examine the 15-minute chart from July 28th to July 30th. This time frame reveals how rapidly the bearish sentiment has escalated. On July 28th, after a brief consolidation, AUDUSD experienced a significant breakdown, dropping sharply from 0.657 to below 0.651 in just a few hours. This rapid decline indicates strong selling pressure entering the market. Throughout July 29th and 30th, the pair continued its descent. We observed multiple instances where rallies were quickly rejected, reinforcing the immediate bearish trend. The price is consistently making lower highs and lower lows, indicating strong short-term momentum to the downside. This 15-minute chart confirms that the 0.65 level, which was previously a support, has now clearly flipped into a resistance zone, and the price is currently trading well below it. Connecting the dots between our news and chart analysis, the recent bearish moves on the charts, particularly the consistent struggle to stay above 0.65, directly align with the negative fundamental news from Australia. The cooling inflation and high jobless rate weaken the case for any RBA rate hikes, making the Aussie dollar less attractive. The mixed performance of the US dollar suggests that while it may not be uniformly strong, its relative strength against a weakening AUD is enough to push the pair lower. The report about AUDUSD struggling around 0.6500 is visibly confirmed by our most recent chart data, illustrating a clear rejection of that level. This confluence of fundamental and technical indicators paints a short-term bearish picture for the pair. To recap, important price levels to watch for AUDUSD are the immediate resistance at 0.65, followed by prior highs at 0.66 and the formidable 0.67 to 0.69 range. On the downside, critical support levels are around 0.638, then 0.62, and the very significant long-term support from the April 2025 low near 0.60. Our unbiased prediction for the short term is a continued bearish trend, likelihood high 70%. This outlook is reinforced if Australia's economic data remains weak, or if the Federal Reserve signals further tightening without a corresponding dovish shift from the RBA. We'd look for price failing to reclaim 0.65 convincingly and a break below 0.64. A short-term rebound to 0.65 to 0.66 is possible, but less likely. Likelihood medium 30%, contingent on weaker-than-expected U.S. payrolls data as suggested by Bank of America, or unexpected hawkish surprises from the RBA. For the long term, we lean towards a neutral to bearish outlook, likelihood medium 50%, as the overall trend from the 0.69 peak suggests underlying weakness. A sustained long-term uptrend would require a significant shift in global monetary policies favoring AUD and a clear break and hold above the 0.67 to 0.69 range, likelihood low 20%. Traders should monitor upcoming economic data releases from both Australia and the US, especially US payrolls, and closely watch how AUDUSD reacts to the 0.65 level. A sustained break above it could signal a shift, while rejection reinforces the current downtrend. Always remember to manage your risk effectively, especially in such volatile markets. That's all for today's in-depth analysis on AUDUSD from Explain the Charts.